Ian, we're glad to have you because you have such great experience, not just covering different semiconductor cycles, but also living in Korea earlier in your career and just seeing what's going on in the Korean market right now with memory chip stocks. I mean, what is your reaction here? Have you ever seen anything like this in your career?
To the extent that they've gone up, absolutely not. We've certainly seen booms and busts for these companies along the way. I was there when Hynix was actually created as a forced merger by the government. This was, two companies, LG Semiconductor and Hyundai Electronics, that were sort of on their way out of business. Things were that bad. And now, in combination, owned by the SK Group, it's worth more than $1 trillion. This was not something that anybody would have believed even a few short years ago.
Do you think that growth is sustainable? And there are more people, more whispers. There's still whispers talking about bubbles, not just in AI, but in these chip manufacturers. I mean, there's thank you to Bloomberg, who's now adapted my algorithm online to feed me finance memes. And there's one going around talking about all these $1 trillion valuations and how that is worth more than all the farmable land in Australia. And they go, it's fine. We're making money. Just buy. Are there real concerns here about these valuations and how big they're getting?
I mean, there absolutely has to be. I mean, we've seen an enormous amount of money come flowing in, but that's very much for the market to decide. And if you look at some of the other metrics, these companies are actually cheap. Right? What? $1 trillion company that's cheap? But look at the forward PEs for these companies. We've got one, I think Micron's about 15. Hynix is less than 10, which means that Wall Street analysis believes that these companies fundamentally have a massive earnings growth spurt ahead of them and that investors haven't actually caught up. Who knows? Obviously, we don't know. And as I've said, we've seen massive boom and busts in this industry in the past. It wasn't, 3 years ago, and they're actually losing money. So who knows? But there is certainly a groundswell of opinion that believes this time is different, arguably the most dangerous words that anybody can ever say.
Right.
That's what people believe.
I'm glad you couched it with that, Ian. Hey, I do want to know a little bit just about sort of the chip ecosystem when we're talking about these memory names. We had Eric Weiner join us a little earlier, along with Sarah Hunt over at Alpine Saxon Woods, who covers markets. And we kind of had this exchange where they talked about, higher memory prices. They're a good thing for, SK Hynix and Micron and a handful of other companies, but not necessarily a good thing for the companies that are the customers. Talk a little bit about the way that it's affected those companies, because we have seen some companies such as Apple, they're able to navigate this. But who are the losers when memory gets this expensive?
Yeah, I mean, 85% gross margins at these companies tells you all you need to know about their pricing power. So
amazing.
Yeah,
and that's for hardware. Like, that's right. Crazy.
Hynix
those are like
12-month
software.
gig is more than 1,000%.
Right?
That's insane.
Yeah.
And these companies own manufacturing facilities as well. They're not just designing these chips and outsourcing. They actually own these multi-billion-dollar plants, and they are running them at that kind of level. So this is obviously a great market for them right now. But to answer your question, PC market, we're going to see HP report today, Dell, I believe, tomorrow. So these guys, the prices of what their components has gone up massively. Obviously, we've seen the influence on the smartphone market. Companies like Qualcomm have had to rein back their outlook for the number of devices that get built because we've seen this massive shift of production into the higher value, higher margin, sort of high bandwidth memory that's going into these massive data centers. So that's, supply and demand is elastic. These companies, there aren't really new players coming into the market because of the high barriers to entry. So that's what the market dynamics are right now. If you're a device maker, then times are tough, right? Your margins are getting squeezed.
And we've also seen the impact some of these companies have had on the South Korean economy, and even the Kospi, which overtook the UK and then overtook Canada's stock exchange and is now, I think, the 7th largest in the world. Talk to us about what that does for the economy overall in South Korea. And there is also this concern that if the Strait of Hormuz stays closed, this energy crunch is going to be acutely felt in Asia first. Any chance that that's going to impact these huge growths that we've seen in some of these companies?
I mean, the company that we've not mentioned is Samsung Electronics, which is actually a larger memory manufacturer than both of these guys, and obviously that's a South Korean company as well. So the combination of SK Hynix and Samsung's success has clearly had a massive impact. Samsung has always been central to the Korean economy and the Korean story. This is, arguably their first world-class company that proved that, the export economy could work for Korea and helped with their success. And we've seen that filter into other areas of their economy. On the flip side, yes, South Korea is an energy importer. It has nuclear power, but it is still heavily dependent on outside sources of energy. That's going to be, cost and negative for these companies, but it's not going to hold back production of memory chips at Samsung or SK Hynix. They're going to go full ahead of that. We've seen them even get over their historic kind of tension with the labor unions there. We've found a way, and everything's moving forward. That's an economy that's very focused on this success story.
Thomas Thornton over at Hedge Fund Telemetry, he joined us last week, and he just sent me an IB on the terminal. He said that SK Hynix and Samsung now are 55% of the total Korean market this right now. I mean, what was the Korean market like when you were covering these stocks, earlier in your career?
No, I mean, that's a very good question. Samsung went from being a very important company to being 20% of the market. So Samsung's kind of position in the spotlight is kind of ebbed and flowed over the years, but it's always pretty much been there. SK Hynix was kind of the sort of weakling younger brother that you kind of hoped would survive, but kind of flirted with going out of business for a long time. It's, time in the spotlight is very, very recent and very, very immediate based upon this recent phenomenon, this AI surge. So a lot of what is happening in that South Korean market is dependent, arguably more than any other market, on whether this AI story pans out or whether, as you mentioned earlier, this is all a bubble and we're all going to go back down again soon.
Oh, we got to end it there, Ian. I'm just kidding. We're not going to end it on the bubble comment, but one final question on a potential bubble. We have 20 seconds left. Given that you've covered different cycles, what would you say about where we are right now?
The extent of how far it's gone up exceeds all prior cycles, and that creates, obviously, downside risk to an extent that we've never seen before as well in this particular area.